Welcome back to the Deep Dive. Today we're focusing squarely on, well, a really fascinating report. It's the Q3 2025 earnings call from a major RNAi biotech.
Yeah, and if you're looking for a perfect case study in, let's say, operational certainty meeting some pretty unquantifiable legal risk, this is definitely it.
Absolutely. So RNAi, for those maybe less familiar, it's RNA interference tech silences genes.
That's right. And this company, they're a leader. Their whole mission right now is proving that gene silencing isn't just science, it's a multi-billion-dollar commercial reality.
And our goal today, to really synthesize the massive financial beats, that aggressive guidance raise, and importantly, the non-commercial headwind that kind of defined the whole post-earnings session.
Exactly. We want to deliver the essential analysis you need to understand why the stock behaves so dramatically.
Okay, let's unpack this paradoxical quarter right out of the gate. We have to start with the numbers. Because fundamentally, this was, a blockbuster quarter.
It really was. But the stock dropped 6.65% the day the news hit.
Yeah, that's the paradox right there.
The divergence is stark. Operationally, they beat consensus estimates by margins that are, frankly, highly unusual for a company this size. Total revenue, $1.249 billion.
Wow. Okay.
Yeah, that's a massive $275 million beat against what people expected. And it represents a phenomenal 149% year-over-year increase.
And the bottom line wasn't spared the beat, right?
Not at all. Adjusted earnings per share, the profitability measure came in at $2.90 versus a $1.67 consensus estimate.
That's a huge beat, $1.23.
It is. It confirms that the revenue acceleration, it's translating directly into profit leverage.
And the core engine driving all this, no surprise really, was their TTR franchise that targets transthyretin amyloidosis.
Right, that rare, progressive, often fatal disease. And the TTR franchise revenue hit $724 million. That's up 135% year over year.
Okay. And mostly driven by their key drug.
Largely propelled by Amvuttra, yeah.
Yeah.
That delivered $685 million of the $724 million.
So these numbers, theoretically, they should have sent the stock soaring.
You'd think so. But like you said, the market sentiment was instantly modulated by a completely different risk factor, which sets the stage perfectly for why we need to look closer at the operational mechanics.
Right. So let's dig into Amvuttra's launch momentum then. Management didn't just call the quarter good.
Yeah.
They used words like impressive, remarkable, especially for the TTR growth in the cardiomyopathy indication, ATTR-CM.
And they earned those words, I think. The U.S. TTR franchise grew 194% year over year, just astonishing growth.
194%.
Yeah. And the ATTR-CM indication, the heart failure piece, is now estimated to have generated roughly $300 million in net product revenue this quarter.
$300 million, just for CM.
Yep. And to put that in context, revenue for that specific indication, it roughly doubled from the prior quarter.
Doubled quarter over quarter. That's velocity.
That's pure velocity in a rare disease space, exactly.
And when you see that kind of growth, especially in a specialized field, it really speaks to successful market penetration. Management seems to agree. They said the 3 strategic pillars of the U.S. launch are now, effectively complete.
Yeah, effectively complete. And what that really means for long-term revenue predictability is that the heavy lifting on the infrastructure side, it's basically done.
Okay. So what does that entail?
Well, first, infrastructure scale. They've got 170 priority health systems set up.
Yeah.
That places the drug geographically accessible to about 90% of U.S. patients. Pretty good reach.
90%, okay.
Second, access is optimized. They have broad payer coverage. Almost all patients have 0 out-of-pocket costs. And crucially, they have first-line access.
Okay, first-line access. Let's clarify that for the listener. Why is that so important, especially in rare disease?
Well, it means eliminating major hurdles. Things like step edits, where a doctor has to prescribe an older, maybe cheaper, less effective drug first.
Oh, right. The patient has to fail on it first.
Exactly. They fail on it, and then they're allowed to move to the preferred treatment. Yeah. Having first-line access just removes all that bureaucratic friction. It's vital for getting patients on treatment quickly and for, physician preference.
Makes sense. And the third pillar?
Third, they confirmed broad prescriber adoption. That's across both academic centers and community settings. So it signals the initial awareness phase is pretty much over. They've got buy-in.
So this operational conviction, it translated directly into a significant guidance raise. But I have to ask, if the execution was this strong and they beat consensus by such a huge margin, doesn't raising guidance by only what, 10% at the midpoint, suggests they were maybe sandbagging a bit initially, or just being overly conservative?
That's a fair question. Investors always wrestle with that one, you know. The prior guidance, it was set earlier in the year. Back then, the ATTR-CM launch velocity, it was less certain.
Okay.
So the 10% raise, taking full year total product revenue up to $2.95 billion to $3.05 billion. It's really meant to solidify confidence based on demonstrated momentum, not just hope.
Right, based on what they actually did this quarter.
Exactly. And specifically, the TTR franchise guidance was increased to $2.475 billion to $2.525 billion. So it signals certainty, even if the absolute change doesn't maybe fully capture this last quarter's explosive growth.
Got it. Looking beyond the direct product sales, what were the other big top-line drivers?
Well, collaboration revenue was substantial. $351.7 million.
Wow.
And that included a major $300 million milestone payment from Roche that was related to the ZENITH Phase 3 trial initiation.
Okay, so that's a big one-off boost.
Just huge non-recurring boost, yeah. And additionally, royalty revenue doubled year over year to $46 million. That was attributed mostly to the strong global uptake of another asset, Leqvio.
Okay, so Leqvio's contributing nicely too. That's a fantastic financial picture overall. Now, let's look at where that money's going. They're clearly ramping up R&D spend, right?
Yeah.
Building the next generation?
Absolutely. Non-GAAP R&D expenses jumped 23% year over year, and that's directly funding the initiation costs for those new phase 3 trials we mentioned, ZENITH and TRITON-CM. And non-GAAP SG&A expenses also increased 35%. That's supporting the ongoing, very robust U.S. launch of Amvuttra and, the commercial field force you need for that.
Makes sense. You got to spend money to make money, especially on launch. So with all this commercial energy fueling R&D, let's look at where that investment is going. The next-gen pipeline, the innovation cadence, they seem really focused on driving differentiation.
They are. The late-stage pipeline is bustling. Initiation of 2 key phase 3s. ZENITH, that's the cardiovascular outcomes trial for zilebesiran and hypertension.
Hypertension, right. Big market.
Huge market. And TRITON-PN for nucresiran in ATTR-PN. Now, nucresiran is their next-gen silencer. It's positioned to be dosed subcutaneously only twice a year.
Twice a year dosing, sub-Q, that's a big deal.
That biannual dosing is a critical competitive edge, especially in rare disease chronic management space. Huge convenience factor.
And they also shared some new, deeper data from the HELIOS-B study. Seemed pretty persuasive about Amvuttra's durability.
Yeah, this is where the clinical value prop really solidified, I think. They showed sustained benefits in patients up to 48 months. That includes the open label extension data.
Okay.
And it demonstrated a robust 37% reduction in the composite endpoint. That's all-cause mortality or first cardiovascular event. That kind of durability is absolutely key for physician comfort and payer coverage in a chronic disease setting.
But the clinical detail that really stood out to me, and it feels like a massive differentiator in this kind of multi-system disease, was the GI safety profile.
Precisely. Yeah, ATTR-CM, it's a multi-system disease. It affects more than just the heart. Patients often suffer from really serious gastrointestinal issues. It's a major burden.
Right.
And this new data showed a significantly lower rate of GI adverse events versus placebo. We're talking a reduction between 37% and 49%.
Wow, lower than placebo on GI side effects.
Lower. So if you can offer a highly effective treatment that also improves, or at least doesn't make worse, a really common and debilitating symptom like GI distress, well, that changes the competitive landscape entirely.
Huge quality of life factor. Okay, so beyond their core KTR focus, they're also strategically expanding. We saw signals about moving into the neurological space.
Yes, starting with a phase 1 trial for ALN-5288. That one targets MAPT-tau for Alzheimer's disease.
Alzheimer's. Another big target.
Absolutely. And a compelling new program, ALN-6400, targeting plasminogen, that's moving into phase 2 for hereditary hemorrhagic telangiectasia, or HHT.
HHT. Okay.
And management believes ALN-6400 has potential maybe as a universal hemostatic agent, basically, a treatment for widespread bleeding disorders, which just shows the breadth of the RNAi platform itself.
Okay, so we've established, I think, pretty clearly, undeniable commercial strength, a growing profit margin, a rapidly advancing differentiated pipeline. Why then did the stock react so negatively? Let's address the elephant in the room, the major non-commercial risk.
This is it. This is the crux of the market divergence. The company disclosed receiving a U.S. Attorney's Office subpoena.
Right, the subpoena.
And this subpoena relates to government price reporting and discount practices across all 4 of their commercial drugs, not just one.
All 4. Wow. It's amazing how quickly good news just evaporates when a significant legal risk like that walks in the door. This is textbook overhang.
Absolutely. The market is focusing entirely on the unquantifiable risk here. Legal scrutiny like this, I mean, regardless of the ultimate outcome, it introduces the possibility of massive legal costs, reputational damage, and most critically, potential adjustments to how they report net realized pricing to the government. Investors are essentially discounting future cash flow because they fear the net price of their core assets, Amvuttra included, could actually be compromised long term.
It's worth noting, though, management tried to push back a bit, provide some counter-narrative on the immediate commercial future.
They did. They reiterated that right now, payer coverage remains exceptionally strong for Amvuttra as a first-line option, and they said they are not anticipating any major access headwinds for the 2026 contract negotiations.
But does the market buy that reassurance with a subpoena hanging over them?
Well, the subpoena makes investors question the durability of those prices, regardless of current patient access. The broader biotech indices, XBI, IBB, they've actually been performing pretty well over the past quarter. Risk appetite seems strong generally.
Right.
So the fact that this stock plummeted against that backdrop tells you this specific risk, the subpoena, is being taken extremely seriously.
It really creates this volatile scenario defined by massive operational momentum on one side.
Yeah.
And just acute regulatory uncertainty on the other.
High risk, high reward territory. Or maybe high risk, unclear reward right now.
Which sets us up perfectly for our final segment. And as always, remember everyone, this is purely for entertainment, educational purposes, designed to explore market dynamics. We are absolutely not regulated financial advisors.
Adopting a slightly sharper, more analytical tone.
Right.
This is not financial advice. But if you were sitting in an investment committee meeting right now, pitching a way to play this volatility spike, I mean, the stock's trading on fear, clearly, not fundamentals. What's the pitch?
Okay. Given the established operational floor, Amvuttra CM doubling quarter over quarter, the confirmed guidance raise versus the known, but maybe peaking legal risk, we have a clear setup for, maybe a sophisticated volatility-focused options play.
And the implied volatility, the IV on the stock definitely spiked. It hit an IV rank over 90% after the print. That means options are pricing in massive future swings. You got to monetize that premium somehow.
Right. So here is the outrageous but maybe plausible pitch. Sell out of the money puts.
Okay. Selling puts, betting it won't fall much further.
Exactly. We're capitalizing on what feels like a solid floor sent by that aggressively raised guidance. Selling puts means we're betting the stock won't collapse from here, believing the operational execution provides a concrete baseline. And let's just collect that really high volatility premium.
Okay, so you collect premium betting on the floor, but how do you structure it for upside? A positive skew trade.
Right. We simultaneously buy out of the money calls.
The call spread's counterpart. Or just outright calls.
Just outright calls in this pitch. We're betting on a strong Q4 print, sure, but more importantly, maybe a rapid resolution or at least clarification of the subpoena risk in the coming months.
The all-clear catalyst.
Exactly. An all-clear regulatory signal, or even just reducing the uncertainty, could act as an immediate catalyst. You could see a massive relief rally, and the long calls would capitalize on that dramatically. So the trade tries to profit from the current uncertainty while keeping a directional bias towards that execution strength eventually winning out.
That's a classic way to play a bifurcated story like this. Monetize the fear, bet on the eventual reality.
So what does this all mean for you, the learner, trying to make sense of this? The two key takeaways feel pretty crystal clear. First, you have truly unstoppable commercial execution, particularly in the TTR space, proven by the numbers, the guidance raise, the CM doubling.
Absolutely undeniable momentum. But second, that momentum now has a very material legal risk acting as a ceiling, or at least a heavyweight, on the equity price.
Yeah.
And the company's whole strategic narrative, it's fundamentally shifting. It's moving from just a breakout launch story to one of a platform scale, rare cardio leader.
Right.
So the critical question, I think, for you to consider is whether this legal scrutiny, this subpoena mess, will resolve without requiring material economic concessions. Concessions that could compromise the net realized price of their core asset, Amvuttra.
Because if that price has to come down significantly,
then the whole long-term value proposition changes, right? That potential margin compression, that's the true test of durability for this entire platform now.
that's the key uncertainty investors are grappling with. Okay, thank you for joining us for this deep dive. We definitely encourage you to continue your own research on the evolving dynamics here and in the broader biotech sector.
Yeah, lots to watch. Until next time.